Hey folks, John Miller here, a little Propane Buzz briefing. Wanted to talk a little bit about what's been going on in the marketplace, and I can talk a lot faster than I can type, so I'll try to take 5 to 7 minutes here to explain some things, at least as I see them. First of all, I hate being wrong. I don't know many people that like to be wrong, but I take great pride in analyzing things and getting it right, and it can be frustrating in this industry at some times when elements and aspects outside the realm of true propane fundamentals have such a big impact on our pricing and the trajectory of pricing. And that's what we're experiencing right now. Back in March and February, I was talking to my clients and telling them that I had a bearish outlook on propane prices for the spring, summer, and fall of 2018. And I still think the propane fundamentals are supported by that, even though inventories right now are lower than where they were a year ago. But the strong expectation in the propane industry is that we're going to see very robust propane production late spring, in the summer, and in the fall in our industry, which leads me to think we're going to see inventories get back up into the 85 to 90 million barrel range by the time we get into the end of September, which is, last year we were around 82. So as I've written and explained, when you go through something for the first time, like we did a year ago, when we came out of the winter with 39.7 million barrels, we had just the second ever draw on propane inventories in April. And people were concerned about supply just getting into the 80 million barrel range. That's why we saw propane prices in Mont Belvieu move up nearly 100% by the time we got into November. So we made it through a winter. And now we're going to be back in a very similar fundamental channel as it relates to inventories are concerned, and the fear and unknown factors are taken out of that. So I think when you remove those emotional sentiments from the trading cycle, chances are you're not going to see a similar run-up. I think that those are sound fundamental aspects. But one aspect, or not one, but let's just call it one umbrella, geopolitical risk. Geopolitical risk is back in propane prices in a way that we haven't seen since at least 2013, 2014, when OPEC decided they were just going to pump at will, and they helped propel crude prices from $100 a barrel well down below $30 a barrel a few years ago before they realized they cut off their noses to spite their own faces collectively. So you have geopolitical risk. I don't know that we're going to get into a trade war with China. Perhaps cooler heads will prevail, but that is certainly something out there. You have the proxy military engagements in Syria, where the United States and Russia are at odds there, of course, or the Iranians are involved in as well in that particular instance. You have the catastrophic and total fall off the face of the cliff economic and social unrest in Venezuela. Venezuela has the largest known crude oil reserves on the planet, and their crude production, has fallen off precipitously, which when you look at what OPEC was trying to do to raise the price of the crude basket up, you dropped Venezuela's crude oil production down below levels that weren't anticipated, and you get a little more global supply and demand rebalancing faster than what was previously anticipated. And you have Brent crude right now, $73, $74 a barrel. You have WTI crude, $67, $68 a barrel. And that has pushed propane prices higher. Now you have the trading ARB, the international trading ARB, open right now from Mont Belvieu originated propane. That $6 to $7 WTI to Brent spread is certainly keeping that ARB open, even as Mont Belvieu propane prices continue to rise and rise. We've seen Mont Belvieu prices rise almost 15 cents this spring. And normally you'd say the trading ARB is going to close. You get higher prices, and that means the trading arm gets narrower and narrower, and that means there's less of a demand for American source crude oil because of the economics. This is the supply and demand balance that you have with a beautiful capitalistic system. It's almost like a living organism. But when you have that $6 to $7 spread between WTI and between Brent, that is when you get the trading arb staying open as prices continue to rise higher. So, okay, so we've talked about the back and not being able to see around corners, which is frustrating for a fundamentals guy like me. What about the future? What does this portend? I still think we're going to see propane production be robust in the United States this summer. I still think the emotional aspects pursuant to crude oil or pursuant to propane and where our inventories are going to be are not going to be strong. But as long as as long as Brent crude remains strong, Bellevue probably gets dragged with it. As long as that trading arb is open and there's interest in American-sourced Mont Belvieu-based propane, propane values are going to stay stronger. And even though there's a wide gap and differential between Conway prices and Bellevue prices, Conway is going to get dragged up with the rising tide of Mont Belvieu prices. As of yesterday, which would have been the 25th day of April, the propane to crude ratio, WTI, was just 53% at Mont Belvieu. It's now 45% at Conway. Those are very comfortable numbers. Those are numbers that you could see that percentage move higher even. It was over 70% at both Conway and Bellevue in the winter this past year. I sent something out on that on Monday. So there's still upside room, but at this point in that time now, if you just look back and focus solely on propane fundamentals, there's also downside risk. This is not a fun place to be when you're out looking to contract. And so I'm going to give like a general nebulous bit here. Cost averaging. Those of you who've been following me for 5 years probably get sick of me saying it, but I repeat it so often because I think it's so valid and so valuable and true. Cost averaging helps. And maybe this year amongst, compared to other years, smaller bites might be the right strategy. Maybe some of you are buying gas for the winter at levels right now that you hoped you wouldn't have to pay this year. And I get that, but it is what it is. There are a lot of factors in the world right now that are causing propane prices to be higher. And most all of those factors have really little to do with propane supply and demand fundamentals, which again, as I mentioned, is frustrating. I think that you hope when you buy, it's the highest price you pay for gas all year long. And I do expect things to change as we go along this summer, and hopefully this will be the highest price that you have to pay. I certainly wouldn't want to go out and contract anything at a fixed price that I didn't have demand for in the winter. Some of you are just probably starting to get your, level pay plan for the winter numbers put together to send out to your customer base. So you're probably a ways off from knowing just how much gas you're going to have at what price that you're going to take to your customer base. So it's very difficult to be patient when prices move higher. And I'm not saying that you shouldn't jump in and take some small bites, but small bites might be the way to go this year, and cost average along the way. And remember, it is only April 26th as I record this. A lot can change in the world in a month or in 2 months. And that propane production vehicle is certainly still planned to come online, so don't lose sight of that. Thanks for watching. As always, a lot of new people consuming the Propane Buzz right now, and we appreciate you doing so. We'll talk to you soon.